Hello there, it's Lomosi Forex, and I'd love to thank you so much for joining me on this video. And before I go on, allow me to thank my mentors, Robert Kiyosaki, who wrote the book Rich Dad Poor Dad, also Timothy Sykes, who wrote the forward to the book The Penny Stock Course, and Matthew Creator, who wrote Rocket Stocks. And you can find all their books on Amazon Kindle. Also, I would love to thank Mike Maloney, who inspired this video. If you want to learn more about gold and the silver, you can check out Mike Maloney on YouTube. I, I think he did a video about a double top pattern of gold and silver. So I thought, hey, let me teach about the double top pattern. So this video is inspired by Mike Maloney. So shout out to Mike Maloney. Now let's get into it. So here we're here to talk about the double top pattern. Okay, so let's dive right into it. The double top pattern is a bearish reversal pattern that forms after an extended uptrend. It consists of two peaks at approximately the same price level, separated by a trough. This pattern signals an exhaustion of the uptrend and the potential trend reversal to the downside. So, at the end of this video, I'm going to show you an example of a double top pattern which has reversed and is ready to go up. Okay, so stay tuned up to the end of this video and I'll show you an example of the double top pattern reversal. Now, definition and characteristics of the double top pattern. Now, as you can see on the screen, you can see the examples of the double top pattern. All right, so there's also like a triple top. All right, so sometimes it will double top, reach a certain level, then go up, and then it will just go down and completely crash to the floor. And another double top pattern is here, right? This is one and this is two, right? Then it just goes crash from at that peak and then it goes straight up, right? So it is pattern formation. The double top pattern is characterized by two consecutive peaks at a similar level followed by a decline. It represents a shift from bullish sentiment to potential bearish presence. Volume trends. During the formation of the double top pattern, volume trends usually show a decline. This decline is a crucial aspect in forming the pattern's volatility. So you can see the pattern here, the way it is. It tops and then it crashes. Okay. So usually when it does this, this is where this gives you like a buy signal right here. All right. This is the buy signal after the market crash. You hear Robert Kiyosaki saying things like the best time to buy is during a market crash. Now, identifying the double top pattern on a price chart. Now, visual cues. Spotting the double top pattern requires keen observation because of price movements and the formation of distinct peaks and troughs, support and resistance levels. Because identifying the two peaks and intervening troughs can provide valuable insights into potential reversal zones. And remember this is the key word right here, right? Reversal zones. So basically you are buying what we call in technical analysis reversals. So the key components of the double top pattern, the four key components of the double top pattern. Number one, peak one. The first peak represents a resistance level indicating a potential price ceiling. Number two, the trough. The trough represents a temporary support level formed between the two peaks. Number three, that's peak two. The second peak makes a failed attempt to surpass the previous peak, indicating a change in market sentiment. Number four, breakdown. A breakdown below the trough confirms the pattern's completion and suggests a strong bearish momentum. All right, so basically when it breaks down after a double top, it becomes a double bottom. So it's counterintuitive, but it will take a time to really get used to it. So when it breaks down, it becomes a double bottom, which is an inverse of a double top. So confirmation signals for the double top pattern. So there are three confirmation signals for the double top pattern. Number one, the bearish divergence. An indicator such as the RSI showing bearish divergence can confirm the weakening of the bullish trend. Volume analysis. Number two, an increasing in selling volume following the second peak reinforces the potential bearish reversal. Number three, support breakdown. A decisive breakdown below the support level confirms the validity of the double top pattern. Okay. Now, trading strategies. The top three trading, the trading strategies for the double top pattern. Number one, entry point. Now, enter short positions after the support breakdown and retest, confirming the pattern's validity. Number two, stop loss placement. Place stop loss orders above the second peak to mitigate potential losses in case of a trend continuation. Number three, price targets. Set price targets based on the pattern's height, projecting a potential decline in the price level. Now, here are some common mistakes to avoid when trading the double top pattern. As you can see from this image here, it does do a double top, right? And then it will just go down, it will break down this. So this is the support breakdown we are talking about here. So these are the common mistakes. Ignoring volume analysis. Now, because overlooking the decline in volume during the formation of the pattern can lead to incorrect trade decision. Number two, early entry. Entering short positions before the pattern's confirmation can result in premature trades and potential losses. Number three, disregarding reversal signals. Ignoring critical reversal signals such as a bearish divergence and support breakdowns can lead to misinterpretation of market conditions. So try your best not to read. And the last thing is the opposite of a double top is the double bottom, which we're going to talk about in the next presentation. But for now, we're just talking about the double top. And then at the end of this, I am going to show you a demonstration of the double top pattern. Now, in conclusion, understanding the double top pattern is essential for traders aiming to identify potential trend reversals. By recognizing the pattern's formation, key components, and confirmation signals, traders can develop effective strategies to capitalize on bearish opportunities. However, avoiding common mistakes and using proper risk management are crucial for successful trading. So basically, the key of the double top is to find a bearish divergence. All right, so what that means is you expect it to continue crashing, but it doesn't crash. And now I'm going to show you an example of a double top pattern. So here I am using TradingView, one of the best trading tools out there. So in this case, it's kind of like a triple top. Okay, so again, shout out to Mike Maloney who inspired this video. So as you can see here, it's kind of like a triple top. Really, it's not really a double bottom. It's kind of like a triple top in this case, but you can kind of see this 1 2 right here, right? This is a double top, but actually it's a triple top. So it comes to a triple top, then a double bottom here, and then I'm using the Bollinger Band strategy right here on TradingView to see at where it reverses. So this is the second time it dropped. So as you can see, according to the Bollinger Band strategy, this is a good entry after a double top. So you have to wait for the double top, right? And then you need to use the Bollinger Band strategy, which will give you the perfect entry. So in this case, the perfect entry is at this price here, and this is a blue. This blue indicates a good buy. So we can also look at another example of a double top pattern and an entry. So again, shout out to Mike Maloney who really inspired this video. So we're going to look at another double top pattern in the Which one we're gonna do? Okay, let's do the Dow Jones. So we're going to do the Dow Jones and see if there was an entry for a double top pattern in the Dow Jones. So as you can see here, you can see that there were double tops here. So like here, this is top number one, and this is top number two. So you can see after this double top, the Dow Jones has broken out of its double top, which is here and here. So ideally, it was actually supposed to crash here, right, according to this chart here, but it didn't crash and it went above the double top. Let's look at another example of a double top pattern. Let's see what we have here. So as you can see, this is another double top pattern which was formed right here, and the S&P has broken through the double top pattern here. It has broken through. It was supposed to crash, right? One, two, it was supposed to crash. It hasn't crashed. It has broken through the double top pattern. Now let's look at gold, the price of gold. Okay, so basically we're looking for an entry. All right, that's what we're looking for. We're looking for a double top and then a blue mark below. So here there is no entry, but you can see there was a double top here and here, right? But we're looking again for that blue entry right at the bottom. All right, similar to what we found. So I'm going to show you one of my favorite double top patterns for you to observe. Like I said, this is a demonstration. Okay, so we're gonna observe a better double top pattern. So this is a perfect double top pattern with an entry right here. So Apple double top pattern is here, and then the entry is right there, right? So that entry, this entry right here, is a bearish divergence, right? There were two entries. There was this entry here, and there was this entry here, and then there was a double top. So this is one, two, and then it gave you an entry here. This was a perfect double top pattern, bearish reversal entry. I was very perfect with the entry here. Okay, and then so that's the double top pattern. So if you see a double top pattern, try your best to look for a reversal. So I don't know which other phone company you can think of that is in the same industry as Apple. Maybe we can think of one. I don't know which other one. Which other phone company manufactures phones? Nokia. I'm just guessing here. Let me see. Usually they follow each other. You know. Usually these stocks follow each other if they're in the same industry. Let's see if we have anything on Nokia. Okay. Okay. All right. So this is a double bottom. Okay. There we go. So this is a double bottom pattern right here. So this double bottom pattern, and then this signals a reversal, a bullish divergence. Right. It may be hard to see with the candles, but you can see like this is a double bottom right here, and we're using Nokia as an example, which is in the same industry as Apple. and it's going in the opposite direction. So Nokia is actually crashing. So down here is the double bottom. So it basically goes with the trend. So it's downtrending, so it becomes a double bottom. If it was uptrending, like we saw in Apple, it would have become a double top. So as you can see right there, this is an entry to short sale Nokia, which is in the same industry as Apple, but the stock is going in the opposite direction. I don't know if we can pick another phone company. I don't know of any other phone company. Let's try Motorola. Motorola. So usually when you find, let's say, a double top like what we found in Apple, you can look at like similar industries, right? So like we looked at Nokia. It was a double bottom. So now let's look at Motorola. So we see at Motorola, we can see this is the first top. So we're going for the second. It's going to form a double bottom very soon. Okay, but if you look at Nokia, not Nokia. If you look at Motorola, this is the first trough, right? So like this was the first peak, and it has dropped, and it has given us a buy right there, a buy signal, and so it's going to go up. So it might break through, or it might drop again to form a double top. So usually, these stocks, they're kind of like related. So look at Motorola, look at Nokia and Apple. They're in the same industry, because we saw the double top forming in Apple. So we look at all the related stocks, and we can see that the double top has formed in Motorola, and that's how we analyze the market. So you can see the stock for Motorola is actually going to go up there. So Motorola is also a good buy. So again, I would love to thank you for watching this video, and just remember the key takeaways. Like, understanding the double top pattern is essential for traders aiming to identify potential trend reversals. By recognizing the pattern's formation, key components, and confirmation signals, traders can develop effective strategies to capitalize on bearish opportunities. However, avoiding common mistakes and using proper risk management are crucial for successful trading. So you really have to be good at trading double tops and double bottoms. So you really have to practice recognizing the support and resistance levels. It does take time to see this kind of action. So if you remember Motorola, this kind of represents the Motorola price action, which is what you see here, right? It's kind of similar to what happened here. So these are Fibonacci lines. So you can use Fibonacci lines, you can use Bollinger Bands, or you can use the RSI to find a good entry point from the reversal, right? So like here, this is an entry point, and here this is a good entry point. And so again, you really need to understand that it is a bearish reversal pattern that forms after an extended up trend. So you just need to understand the pattern, study it, and continuously keep trading it, so that you get used to seeing this pattern. So I would love to thank you again for watching this video. My disclaimer is: do not buy what I tell you to buy, do not sell what I tell you to sell. Do your own research before you buy or sell anything. I would love to thank you so much for watching this video. Take care, and feel free to rewatch this video to learn more. Take care, and bye bye.